Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 3 o'clock in New York. It is Thursday, December the 3rd, 2015, and this is the Daily Report for Gold and Silver. And what a day we're seeing in the markets. We've got gold up about $10 currently, $10.63 and change. Low of 46.54, high of 64. We're just off of the high. But is that the real picture? Are we looking at a gold rally here or something a little bit different than that? What we're looking at here is the dollar index, dollar in virtual meltdown mode. You can see that on the single candle right here, in which we had an open 99.88. The high was 100 on this day, and it's currently at 97.77, and that's absolutely putting it off quite some points. And the euro dollar is on the bottom, trading at 109.51. Tremendous move, down 2.22%, so 97.73. You'll see that even though it's up $10 right now, the real picture is that it's actually down $11 and change. Take in a weak US dollar, you've got to add $22 to the value, and that's where we're getting our net $10 to the upside. Is not buying in the market, rather it's a weak US dollar. So are we looking at a rally in gold, some sort of key reversal, and a tentative bottom in the market? The one thing that we can say is, first of all, I don't really believe that, not as of yet. Now, we did make a lower low on the day, no doubt about that. We're below 50, actually into the 40s, probably around 46 or 47, and the pattern that we are currently forming in the market is simply a piercing line. Now, if we get this market where it closes over this prior candle, which is roughly at 1070, that would give you an engulfing bullish. Of course, in terms of the two-day pattern types, is one of the stronger of the candlesticks that indicate some sort of key reversal. However, you would never take this call unless you had a confirming candle, and that's really the smallest component. There's obviously other components that would fit into that, but it would look something like that. As I said, one day doesn't make a key reversal. We haven't gone long this market. Rather, I'm looking at these rallies as potential opportunities to actually initiate a short in the market. The real question is, are we going to see gold continue to trade higher? Are we going to see the dollar continue to be under pressure? As of 10:30, the current time here in Honolulu, the answer is the dollar continues to trade under pressure. You can see this 38% retracement level. That would be a logical point that we could look to see if the market would actually find some support. That's not to be the case. It's currently barreling through there, and our next real target or area on a technical basis on the US dollar comes in at about 96.35. So although we are trading up around $10 on the day, you can absolutely see that we have run into a little bit of resistance. It might just be a simple consolidation area, but when we look at these highs, roughly at 65 right in this area here, this being a 2-hour chart, you can see that we've come off of the highs and are effectively trading into the body of the prior candle. However, at the same time, we've had a real dynamic move to the upside, and a little bit of backfill certainly is to be expected. Now, the other thing that we want to look at is some of the shorter term studies and the Japanese average charts. First one we're going to look at, this is a half-a-day chart, 720 minutes. You can see the rally that came into the market and the fact that we have at this point really sold off of that point. Realize this is using the midpoint of the prior candle. Same thing with the daily. And the other thing about a Japanese average chart is it is always going to lag behind any information that we glean from a standard candlestick chart. But you can see there's nothing extremely strong in terms of any kind of upside trend, not at least yet, not according to the Heikin Ashi charts. So there's no doubt we absolutely are witnessing a strong flurry in the precious metals markets. It's really the weak action of the dollar, as we spoke about at the beginning of this report, that is precipitating this entire move. And that's the reason I believe we could easily see this rally be short-lived. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.